I'm Eric Birch from miningclips.com, and I'm speaking with Peter Spina, founder and president of goldseek.com. Welcome, Peter.
It's great to be here, Eric.
We've known each other for quite some time, and the junior resource sector has certainly been all over the map with higher valuations and lower valuations. What people are asking over the last few weeks, do you think we're finally at a bottom in both precious metals and base metal prices?
I don't believe that we've hit the ultimate bottom. I think gold and silver could make a bottom here in 2016, but it's also important to look at the right perspective, because if you look at the Canadian gold price at $15.50 an ounce, it has done quite well, or the euro gold price. But dollar terms, I think we can see the gold price still head lower. $950 a thousand looks like a pretty good floor around there. But at that level, it could be an area where some of the mining companies could start to reverse, and we start to actually see some companies lift off some really extreme levels. We've really seen huge price destruction in a lot of the juniors to major companies like Freeport-McMoRan down 95% from its highs.
Well, and many mid-tier and even senior producers are following suit with that, and certainly junior explorers have been creamed over that time period. You mentioned it was rather interesting that in Canadian dollar terms, gold is still up above $1,500 Canadian, while it's trading around 1,000 US, and that's certainly because of our the foreign exchange on our dollar. But I remember back when silver was approaching $50 an ounce and gold was making its move towards the 2,000 mark. At that time, our dollar was pretty much on par, and so the dollar advantage that you would get working in Canada and selling in U.S. dollars may reverse itself over the course of the next few years. We've seen it gain strength this week.
Yeah, these markets are pretty extreme right now. It's really, the volatility is quite incredible to see the Canadian dollar go from 0.9 to 1.45 or higher against the U.S. dollar. The U.S. dollar has been on a tear, and it doesn't look like that's going to stop anytime soon. I think the dollar strength will hold up there, and that does put the pressure on gold and silver U.S. dollar prices. But for miners in Canada or in South Africa, they have some advantages now with the Canadian or the Rand gold price doing near the record. So they're not doing so bad in local currency terms.
Oh, that's very true. And what do you think about, say, a recovery in the resource stocks? Obviously, there has to be a reason to go out and buy a company that has good prospects and or perhaps even defined resources on it. But we don't see the rush of investors coming in right now. What needs to happen for that to change?
Well, there needs to be some motivation. So when you have a constant downturn every year and prices keep getting cheaper and cheaper, so there's no incentive to go and make a purchase. So fear dominates the market right now. I think we need to see some successes. We had a couple of companies, Gold Standard down in Nevada, they had a really good drill results in the Carlin Trend, and they more than doubled late last year. So there's some selective things happening like that. I think we see some big discoveries that could pull some capital in. But I think what we'll have to see is a bit of a bottoming out in the sector in the next year. And you'll see selective companies do quite well, but there are a lot of companies that won't perform in this market. There's several hundred zombie companies in Vancouver, mining companies that I think still need to be kind of consolidated or go away. But it's the process. It's working its way through, and overall the sector is starting to really find ways to cut costs, be more efficient, and those are the things that will be more attractive to the institutional and retail investors. So there are some good things happening, and that will pay itself, and in the next cycle will really pay off well.
Right, and I also see that we probably need some sort of price bounce as well. We're pretty much producing gold more or less at the cost of sales, and the same for silver. It's very close. There are very few companies that are way down on the cost curve doing that, and it's a similar thing for copper as well, and maybe that even spills into the oil industry. I heard last week that the world pumps 2 more billion barrels a day, a million barrels a day than it consumes, and so we're in oversupply, and with China slowing their base metal uptake, and North America really not, they're actually declining their consumption year over year rather than growing it. Where's that demand going to come from in the future?
Well, eventually the growth will come back, but that could be 5-10 years down the road. And a lot of these debt issues have to take care of themselves. I'm more optimistic about the precious metals because, like with silver, it led the copper and lead and all these things prices lower. So a lot of the supply, a lot of mines are cutting back or shutting down. So you're starting to have some supply issues. So it's like the marginal, like in oil, you have a marginal supply and it can really crush the price. And so when we have a supply deficit coming into the gold and silver sector in the coming years, that could really help the price out. But we also have huge short positions in silver and gold. And if we start to see this volatility in the stock market continue and global geopolitics, these problems continue to evolve, people might come back on Wall Street into the gold market, and that could really create a short squeeze. So we could, there could be a surprise on gold going up a couple $100s, and that would throw a lot of the shorts off guard, and it could create an interesting year ahead. But I think what we'll likely see is, we'll see a bit of a rally and consolidation and just the market bottoming out, which I think the sector, the mining companies can start doing well once there's a certainty on the floor on the price of these gold and silver prices.
Right. I agree. Peter, as always, it's a pleasure speaking with you, and hope to catch up with you again, perhaps in Toronto.
Okay. Look forward to it. Thank you.
Thank you.